Alright, what is good, y'all? Back again with another one, and this video is a very important video. I think this will be very helpful, and you guys saw the title, The Key to Improving Your Win Rate, and how I am able to have such a high win rate. And for credibility, I didn't lose a trade the entire month of September. You can check my social medias, I posted about it this morning, but no losing days in September. I have a relatively high win rate, so let me go over a few things that allow me to have such high win rate. So I kind of wrote them down because it is a lot of things. So let me get started with how important it is to be able to identify low probability trading days, right? So I'll just go over all the things that I've written down and then I'll go more into it. So first things first is no draw on liquidity, right? I feel like I've said this so many times. If you do not have a draw on liquidity, it automatically lowers the win rate of your trade because you are essentially guessing. You are guessing where price wants to go, right? Would you rather be guessing to an area where price is, or trading to an area where price is, where it is very, 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 very high probable we are going to go there, right? It's a no-brainer. So if you do not have a strong draw on liquidity going into the day, then it's just sit out, man. Sit out. It is so easy to avoid because it's just think logically, bro. Think logically. Would you want to shoot? I've said this 3 times, I swear. I'm not even gonna say it again, but fuck. Would you shoot a jump shot contested, or would you shoot it a wide open 3, right? Trading to a strong draw on liquidity is a wide open 3. Trading to no draw on liquidity, a low probable draw on liquidity, is like taking a contested jump shot, right? Take the free one. Take the free shot. Number 2. And this is, you've probably heard this before, but if we have moved a lot overnight, then like let's say Asia or London, we move a lot. That could possibly mean an indicator that we have already expanded a lot on the day. So there's a decently high chance that the New York session is not going to expand even more. And obviously it could. I'm very aware that it could, because me personally, I go into every single trading day, regardless of what happened, looking for the opportunity to trade. But just with these things in mind, I am always, like, it's in the back of my mind. Like, if we moved 200 points overnight in Asia, taking out strong draws and liquidity overnight, then you can expect the New York session to not be as probable. So that's thing 2. 1, draw on liquidity. 2, if we expanded a lot outside of New York, you cannot expand. Well, more than likely, New York is not going to have another huge expansion, right? Number 3, in a range, pretty cut and clear. If you trade a reversal, then this maybe works for you, but I trade a really strict continuation. And when we are in a range, and a range is just rejecting off highs, rejecting off lows, and essentially in a box like this, just bouncing. So when looking for a continuation, why would you want to trade in a range? And the number one thing I have, and I tell this to everyone, how to avoid a range and how to not trade and avoid losses when we are ranging, is simply zoom out to higher time frames, right? If you were to zoom out to the hourly time frame, the 5-minute time frame, the 15-minute time frame, you will most likely very apparently see that we are not moving and we are not continuing, we are not trending anywhere. And this has to happen in the markets, right? We can't just be expanding nonstop. We have to expand, consolidate for a bit, maybe take out a low, and then expand again. It's not going to be all expansion days. If that was the case, I would be a millionaire at this point. I would generally be a millionaire, right? So when we are in a range, it is very easy to avoid by simply staying on higher time frames. 1 hour, 15, 5-minute, and you will very blatantly see that we are in a range. And a range literally just looks like this. We're moving sideways. And if you do not do this, you will probably be stuck up on the 1 minute. You see 1 good candle, 2 good candles, and you automatically think we are just breaking out of the range, and price is automatically clear, and price will automatically clear up because you see 1 or 2 good candles on the 1 minute time frame. That shit is not how it works, bro. You'll probably get chopped up in the range if you just enter off a few 1 minute candles. So that is number 3. And number 4 is typically, I don't really pay attention to this as much, but it is a thing you've probably heard before, and it is if we have a very high impact news day, as in NFP or CPI, typically the morning of or the day before, we might not have that much of an expansion day, because the hours leading to it, or the next day, the news day, is probably going to be a very volatile day, and we will move a lot and expand a lot during that day. So the day prior, we might not make any big moves in the market. And obviously, you want to capitalize on the big moves being made, right? Boom, take out a low, expand to highs. That's what you want to capitalize on, not days where we possibly moved a lot overnight or have a big news event the next day. Those are typically days where we don't expand, and you cannot expect a lot out of the markets. And obviously, the last one is pretty much the same thing as being at a range. Chopping. If we are, I mean, you are a retard if you enter in a clear consolidation. Like I said, it's the same thing as a range. If you enter in clear consolidation, what are you doing, bro? You are asking to take a loss. You are generally saying, I love setting myself back. I generally love losing confidence in my system because I am looking at a literal barcode and decide to enter it. It's pretty blatantly obvious when we are chopping. Stay out of it, man. Stay out of it. Do not think you can predict price when it's not clear. Like I always like to say this, just genuinely wait until price is blatantly clear in a direction we are going, right? And that all stems from drawing liquidity. All stems from drawing liquidity. So if you just wait until price has a clear direction and going in one way and it is obvious, win rate through the roof. The next thing is let the trade come to you, right? I would not be able to have, I mean, how am I going to put this? I would not have a 100% win rate in the month of September if I was like constantly looking for trades. And if I was dialed in on the charts every single day trying to force a trade, look for a trade, then I would probably take many more losses because I'm not letting the trade come to me. So what do I do? And then it's one thing that greatly helps me have a very high win rate is just simply let the trade come to you, bro. It should pop out at the screen. It should be like, you should not need to zone in and it feels forced. It feels forced. You've probably had this feeling, you're looking so deep into it and you're like, oh, is this a good trade? Is this not a good trade? Should I take this? Should I not? Just let the trade come to you, bro. Let the trade come to you, and it will, like, you will see, bro, like an A+ trade, an AA+ trade, it will pop out of the screen. I kid you not, I have had multiple trades where I am looking at my phone for a minute, I look up, and I like, this looks like, it sounds like I'm joking, but I'm not even joking. I look up from my phone, and, like let's say we're continuing lower. I look up from my phone, and, like, we're in a retrace, and then, boom, I see the candle that's, like, literally perfect, and I kid you not, like within a split second of 10 seconds from looking up from my phone and looking at the charts, I will enter that trade and not even think twice. Why? Because it is so blatantly obvious and I let the trades come to me. I'm not forcing, like physically looking for a trade. No, I just let it come to me. Let it come to you and it will be blatantly obvious. It should be a clear trade. The next thing, set conditions. I've said this before. You can easily improve your win rate just by setting simple conditions. I do this all the time, and for me, I'll just go over mine, right? Again, strong draw and liquidity, trending price action, pretty much everything I just listed. Strong draw and liquidity, trending, not in a range, high volume, like it's clear, and you can just have a yes or no answer to if you're trading that day, right? Because if you have no strong draw and liquidity, that is a part of your conditions that you can just be like, okay, I do not need a trade today because there's nowhere where price is a strong draw to. So just set conditions, and if your conditions do not play out, then you don't need a trade. And by conditions, this is important. By conditions, I don't mean setting a mechanical system, as in we need a 5-minute gap tap, we need a this, we need an IFEG. No, I mean conditions as in just physically looking at price. Do we have a strong draw? And are we trending? It's not like literal mechanical, we need to do this. It's just saying, are we moving cleanly? Are we, like with volume? Like I said, are we moving with volume, trending, in a range to a strong draw and liquidity? And if those are yes, then okay, you can be more open to trading because it's obviously a high probable day, right? So that will increase your win rate. Another one, look for reasons not to trade, right? And you're probably like listening to all this and you're like, bro, are you ever going to trade? Yes, I get a decent amount of trades every single month, and this is another thing that helps me be able to stay out of losing trades, losing dates, losing trades, losing days, and have a very high win rate, and it is simply looking for reasons not to trade, right? If instead of looking for every single reason to trade, just look for why not to trade. Simple, right? Like let's say we reject off a session high, we reject off a London high, we reject it, and then you get one good candle to the direction you want to go. Is that probably going to be the most high probable trade? No, because we are literally rejecting off a high, right? You probably want to see price trade above that high and confirm we are going to your next draw. So if you just look for reasons why this is not a good trade, you can very easily filter out a lot of easy losses and losses you can very well avoid just by saying, okay, is like just look at it, be like this. Oh, we don't have a strong draw on liquidity. Okay, that might not be a reason good to trade. Oh, let me just hop on the higher time frames. We're in a range. Okay, that's a reason not to trade. Oh, like the candles are 2 points. Like we're not really moving with volume. Okay, that could be a reason not to trade. They're like countless reasons. But if you look at it in kind of the opposite perspective, kind of vice versa, I feel like a lot of people are looking for every single reason to trade. Now, if you look for reasons not to trade, you will filter out so many losses, so many losses, and instantly increase your win rate. Next one is you just have to realize that, like you just have to realize there's no, like you are forcing trades, you are forcing payouts, you're trying to speed run the process on getting paid out in trading, which is the dumbest thing ever, bro. I guarantee, like for anyone in any one position, in no matter what position you are in, you do not need to be forcing trades to get to X result faster. By doing the polar opposite will get you there faster, right? Like you do not, like I feel like so many people just see all these people on social media getting payouts, and immediately that goes to them thinking they need to be doing more, they need to be taking more trades to catch up to them. No, bro, there's no reason you should be speed running anything. You have time. Let the trades come to you. You don't need to be trading every single day. You do not need to be forcing trades. You do not need to speed run your process. And by speed running your process, you are just gonna continuously set yourself back. Please do not do it. You do not need to get X payouts by X date. You don't if you just simply stay patient, let the trades come to you, and do everything I kind of just said. You will have most likely a high win rate, and just over time, after sticking to your system, after sticking to your rules, you're going to be like, oh, I'm eligible to request and have a good balance. Cool, right? There's no reason to speed up your process. It's like there's no reason. Next thing, I just said this, but the trade should be super obvious. It should jump out of the screen. I literally just said this, but like the trade should jump out of the screen, and you really shouldn't have to think twice about it. I've said this before, but if you have to sit there and think about the trade, oh, do I enter this? Do I enter this? Is this a good trade? Is it, like, if you're debating it, generally sitting there and you have that gut feeling that this could immediately stop you out and it's not the best trade, don't take it, bro. Do not take it. Like, if you are second guessing yourself, then it is not a good trade. I guarantee it. If you are sitting there being like, no, not a good trade, bro. It should be blatantly obvious and pop out of the screen, and you should not have to think twice about it. You should see the trade and be like, holy shit, I'm gonna make so much money today. Like, not like just like you should have really high confidence in the trade because it is super obvious. And I'm just going to go over this again because it is so important, and this is the last thing in this video, but let me spell it out for you guys. Draw on liquidity. Yeah. Draw on liquidity. It's the most important thing in trading. It is the most important thing in trading. Everything is centered around a draw on liquidity. Even for top tick, bottom tick traders, reversal traders, continuation traders, support and resistance traders, draw on liquidity. You have an objective. You have an objective to where you want to see price go, and your trade will always be revolving around draw on liquidity. So it's the number one thing, bro. It was the first thing I said in this video, and it is the last thing I said in this video for a reason. Draw on liquidity is king. If you do not have a strong reason to trade to an area in price, then there's no reason to take the trade. Draw on liquidity. If there's anything to take out of this, besides every other reason I gave you on how to increase your win rate and stay out of trades and avoid losing trades, it all stems from draw on liquidity. So, with that being said, that is a video in the description. TikTok, Instagram. I teach for free in my Discord every single day. Draw on liquidity. Yeah, I send in my draw on liquidity every single day in my Discord. free recaps at 6 Q&As, and I am affiliated with Alpha Futures, best prop firm. I am currently trading 3 150Ks with them. Goated firm. Code Jack will get you discounted. And of course, subscribe. Peace.